Hi everyone, today we talk about Netflix because it just reported earnings and it was a really weird earnings for Netflix because the stock did not move at all. But we're going to get stuck into Netflix, talk about their earnings report and then talk about the stock in general because it's probably been actually like a good few months. I don't even think I've talked about Netflix stock this year actually. And after last year actually, it just had such a crazy time last year. That stock was like a roller coaster last year. And it's just kind of like, just been really quiet so far this year for Netflix. So we're going to look at the earnings and we're going to talk about the stock in general and what I think of the stock going forward. So Netflix earnings were actually not too bad. They actually hit the EPS side of it, they hit the revenue side of it, which is all really good. And normally when that happens, we see the stock go up. But then Netflix also then turned around and said, going forward now, mainly because it hinted at Disney, there's going to be a lot of pressure on the stock, and that led to guidance not being cut slightly. And that's, you know, we all kind of know that's because of Disney. It was going to happen because of Disney coming in this area, and they just kind of put that in there. But we kind of knew that were going to happen, and the earnings weren't like a massive beat, which kind of let the stock to go like absolutely nowhere. So it's a pretty chilled earnings really from Netflix going forward. And going forward, you know, Netflix, Disney, you know, for so long Netflix has just had kind of like, it's been left alone, it's kind of like controlled the streaming area, and then one or two companies have just started to creep in, and now a big player's gone into this area, it's seen how much potential that there is in that streaming service, which is Disney, and they're going to try to disrupt Netflix quite a bit, and you know, it was always going to happen at some point. And Disney is probably the biggest competitor you could have had going into there. You know, the amount of shows that have been pulled off Netflix now because Disney only wants the Disney stuff shown on Disney. You know, that is going to affect Netflix in the long run slightly. I think the pricing of Disney was pretty good as well. So yeah, I do think Disney is a massive problem for Netflix going forward. Still, I think Netflix is kind of like that king of that streaming sector. But yeah, it's going to be definitely interesting over the next year, 2 years, how this is going to develop against Disney. The PE still sits around about 137, which is quite a high PE really. I don't know loads of other stocks that are Netflix's price and have kind of that PE really. It's a very high PE. The revenue side of it is still 24% growth, which is you know, definitely better than double-digit growth, and EPS is still a really good high percentage. You know, it's set to double. 67% growth of EPS is forecast for like the next year. So these are really good numbers overall, and it's kind of a classic growth company where it doesn't really matter what PE is. It's just on how this company is growing revenue and EPS, and if it grows it really well, growth investors kind of chuck the PE out the window. Where my kind of like philosophy with like investing is I do like to have a PE that's like a reasonable PE even in growth stocks. For example, JD.com, that's growing at like these sort of rates, and their PE or forward PE is down in the 30 range. So, but Netflix overall, my kind of opinion after this earnings report and going forward, it was an interesting earnings report because, you know, it wasn't too bad, but we're starting to see the Disney effect coming into Netflix right now, and it's still the king of streaming. I just think that like over this next year, the next 2 years will be very interesting to see who comes out at the top. I can't see loads of people getting both the Netflix streaming service and the Disney streaming service. So it'll be interesting when the actual Disney streaming service is like launched, if there's a mass amount of cancellations in the subscriptions and they just then go over to Disney. So from my point of view going right now, Netflix, I do like the company, I do like the growth side of it. I don't like the P obviously, but I can understand why people would invest into this company. For me, I think that Disney is just such a massive threat right now, and I'd like to see how that plays out over the next year, 2 year. And then from there, maybe then if Netflix can see off Disney and it's still that streaming king, then maybe that might be an interesting time to like invest in a company that carries on growing, you know, having that growth right there. But for me, it's going to be a rough ride in Netflix for like the next, you know, year, and how it's going to do with Disney. But I do really like the company, and you know, I would like to see the company do well. And if I was to say, you know, is the share price of Netflix going to be going up in like the next 6 months, 12 months? I'd say it will do. You know, I do believe the stock is still going to go up. I just think it just has a threat that we've not seen to Netflix at all in its history. So we'll see how it manages with that. That's videos today, guys. Talk about Netflix. Obviously, after that opinion, I'm not going to be buying any shares in Netflix in the next 12 months. But if you're looking to Netflix, I hope it helped you. I hope it gave you some information on the potential threat with Disney. And that's the video for today, guys. Give the video a like, subscribe, and I'll see you in the next video.